The Debt Demolisher TV with Sophia Melone.
Hi everyone, are you excited for another episode on the Debt Demolisher TV? I want to continue our conversation around student loans. There's hot topics around this conversation for the one-time debt relief, as well as what options are available for student loan forgiveness. And I am going to be talking to you guys about what you need to do if you've already applied for the one-time debt relief, and what are some things parents need to take into consideration if they have Parent Plus loans. So listen closely and share this out. Let's go. Hello, everyone. I am Sophia Melonē, the Debt Demolisher, here to bring you the tools, tips, and the tricks to help you manage your financial baggage the right way. What an honor and privilege it is to be before you all for yet another live stream conversation around student loans right here on none other than the Debt Demolisher TV. So if you are new to tuning in, make sure that you hit the follow button. Make sure that you begin to share this out to invite other people inside of the conversation. So that way we can be all the way clear on all of the latest news and the breaking news for the not only one-time debt relief, but most importantly, getting us closer to those who will qualify for public service loan forgiveness as we are approaching the deadline for the limited waiver that is set to expire October 31st, 2022. So this is literally days away. And I want to be a source of encouragement. I want to be a source of support. And I also want to be able to provide a space of clarity to help you get clear on any actions that you may need to take in order to leverage this opportunity. So many of you have jumped in. I'm just going to go ahead and talk about the most popular thing that have popped off this weekend. And that is the initial launch of the beta launch of the one-time debt relief application. It's seamless, it's smooth, it's easy. Some people thought it was too easy, but I want to just encourage you all, if you did not have an opportunity to visit the site to submit your application, I want to encourage that you do that. I literally just checked it out, made sure that the site was still working, and it is still working. Let's go ahead and jump into our questions. Thank you so much. If you can just continue to drop that link in there as people join into the room so that they can know exactly where to go, that will be helpful and beneficial. So let's first start off with the public service loan forgiveness and why it's so important for those who qualify for it to take advantage of it. So I know I've been sharing that we've been talking about two different conversations lately here on the page, not only about the one-time debt relief, but more specifically also around the public service loan forgiveness. The public service loan forgiveness is a specific program that is available to those who work in public service. And when it comes to that, it's not about what you do, it's about who you work for as your employer, meaning the person who issues your W-2s. So if you are someone who works either for a federal government, a state and local government, a tribal government, or if you are someone who works for a nonprofit 501c3, or if you are someone who works for a nonprofit that provides one of the qualifying services that will make them eligible to receive public service loan forgiveness, then you want to make sure that you take advantage of this limited waiver that's set to expire literally in less than 15 days. So what should you know, and what's important for you to know as it relates to this conversation is, number one, if you've worked for a qualifying employer in the past, you want to make sure that you take the initiative to complete a public service loan forgiveness form for your time that you work with that qualified employer, as long as you made any payments on your loans, meaning those were direct loans or maybe even FFEL loans or maybe even Perkins loans. As long as you consolidate them into a direct loan, they will be able to count. But if you've done that prior to or by October 1st, 2007, so any payments from October 1st, 2007 up until now, those payments, any prior payments, the Department of Education is indicating that those payments will count towards your eligibility to get one step closer to getting 120 qualified payments, which will allow you to receive forgiveness once you have reached that count threshold. Some people were asking questions around, well, what if I no longer work there? What if I'm having challenges with getting the former employer to sign off on my forms. The Department of Education has included references inside of the form to let you know that if you have been experiencing challenges with getting your former employers to sign off, that you can check the box indicating that either the employer is no longer in business or that they are refusing to sign. And when you check that box, they're going to work with trying to get what they need verification in terms of helping you get what you need from those former employers to get that verification. Or what you can do as a means to kind of support the efforts is by providing, I want to say, alternative support. And alternative support could be what you could show as evidence of what you have been able to maintain from records to evidence that you actually work for that qualifying employer. So that could be W-2s, that could be pay stubs, and so forth. Some people are asking, what is the link? So the link for public service loan forgiveness, and this is for those who work in public service or who have worked in public service. It is studentaid.gov/PSLF. That is where you go for the link for the Public Service Loan Forgiveness Limited Waiver. If you are having questions around the one-time debt relief, which is the beta application that was launched starting Friday, and it's still available right now, you can go to studentaid.gov/debt-relief/application, and it will take you directly to the site where you could apply for the $20K or the $10K relief, depending on whether if you were a Pell Grant recipient and you have federal loans. One of the things that I want to make sure that I'm stressing with you all is that any conversation that I'm having today is pertaining to federal loans. So if you have private loans, this conversation does not apply to you. If you were a person who had FFEL loans that were commercially held, then you could fall under one of the two that I'm covering today, depending on your timing of when you consolidated your FFEL loans into a direct consolidation loan, and whether or not if you are eligible for public service loan forgiveness, because based on the information that I received and based on the information that I've been able to confirm and verify through the Department of Education, is that even if you qualify for public service loan forgiveness, if you have FFEL loans, those can still be consolidated, just not for the one-time debt relief piece. So I have a question. Is the beta form I received legit? So the beta form is legit. One of the things that the Department of Education has indicated and stressed is that as long as you received an email confirmation after you've submitted your form under the beta application, because it was a really short form, you only had to, it took like less than 2 minutes for some people to do, literally takes less than 5 minutes to fill out your information. But as long as you received an email confirmation that you have applied, then you should be good to go. The only way that I would question whether or not if my application was actually received is if I did not get an email confirmation. So if you have submitted your application using the .gov web address that I've been sharing and that people are also including right here inside of this live stream, which is studentaid.gov/debt-relief/application, that will take you directly to the application site. And you will put in your borrower's name, your name. You will put in your former name. If you did have a former name, meaning you were maybe married before, you changed your name, whatever the case may be. You have to put in your social security number. You have to also put in your date of birth. You also have to make sure that you put in a valid email address as well as a contact number. And then you also have to make sure that you check the box to certify under penalty of perjury that everything that you're certifying as it relates to what's in that form is accurate to your knowledge. So if you've done that and you received your email confirmation, hold on to that email confirmation. Do not delete it. Do not let it go to spam. Go and look for it in case it might have gone there, because that's going to be your form of record to prove on your end that you have applied. If you did not get a confirmation, then you, my friend, may want to go back and make sure that you submit your application again. Make sure that you're putting in a valid email address. Make sure that you are using an email address that you're actually going to be able to check. because more than likely that's where the form of communication, if they need anything else from you, is going to be received. So use a valid email address, use a valid contact number, make sure that you are putting in your name, you're spelling your name correctly. If you get an error message, make sure that you check for spaces and so forth. Another thing is some people may have issues where their name may have been misspelled, maybe when they initially submitted their application. I've been encouraging folks to log into their FSA-ID account and actually take a look at their borrower's information, meaning their loan applications, and seeing how their accounts are set up, because essentially that's how the Department of Education has them in their system. But even if you are coming across these issues, just give it a minute, refresh it, make sure that there's no errors in what you're inputting in terms of the fields, and then submit. So hopefully you'll be able to get a success after that. Please help. I have $66,000 in Parent Plus loans for my son who graduates in December. I made $30,000 last year. So what you really want to consider, of course, is leveraging this one-time debt relief. Now, when it comes to the one-time debt relief, and I want to touch on both of these for 1 second, if you don't mind, but I'm going to start with the one-time debt relief. So if you are a Parent Plus borrower, meaning you took out a loan for your children to go to school, and you were a Pell Grant recipient at whatever point in time in your life, then as long as you meet the income criteria, then you should be able to receive up to $20,000 in relief. In this example, if you have $66,000 of outstanding student loan debt, then you know that you would at least get $20,000 of relief if you were a Pell Grant recipient yourself, not your child, but you yourself, and you meet the income criteria based on your tax filing status in either 2020 or 2021. The next thing you want to think about is if you were not a Pell Grant recipient, then you know that the max that you will receive as a Parent Plus borrower, or as any borrower, any federal borrower, let me be specific, that you will get up to $10,000. So that would roughly take you anywhere between having a loan balance of $56,000 or $46,000, depending on where you are. But you made a valid statement indicating that if your income is at $30,000, you really want to look at your options to see how can you modify or make changes to your repayment plan. When it comes to the Parent Plus loans, from as far as I understand, when you go to consolidate, if you consolidate, and I'm not saying that you should, so let me be very clear on that, but you want to look at what are your current repayment terms for the Parent Plus loans that you have, because I don't know what your current repayment terms are. If you did the standard repayment, if you did graduated repayment, if you did extended repayment, I won't know that. And I don't even know if you could really be able to tell inside of your profile right now, since everything, no, you should be able to see what your repayment plan is, even if the interest is set to 0. So you might want to log into your FSA-ID account and check that out and see which plan type that you have. You're not going to be able to see the interest rate that was assessed when you originally took out those loans for your child, because it's set to 0. However, you could look at your statements from your loan servicer, because technically you should be able to see a history of the statements that they issue you. If I'm not mistaken, I'm pretty sure you get a statement every so often letting you know what your loan balances is and so forth. So if you could access your account, if you could access your loan servicer's account, log in and look at your documents, look at your history, see if it shows you what those interest rates are. Because I know from the time when I had student loans, I remember when I used to get letters in the mail, I remember where it would tell me what my original loan balances were. I remember what it would tell me what my interest rates were. And I remember what it would tell me what my current balance is as a result of some of those loans that I had that were unsubsidized and that interest was accruing on those loans. And so I'm pretty sure that you should be able to access your account histories, meaning your statements, if that stuff is being maintained under your online profile. Hopefully it is, but if it's not, you might want to make sure that you check into that. So once you've identified the type of loans, not the type of loans, but the loan repayment program that you're on, then you want to look at, would it be beneficial for you in your situation to consider consolidation? So I want to share this too, because when you're on an income-driven repayment plan, and let me be very clear, when it comes to Parent Plus loans, the only type of income-driven repayment plan that can qualify for a Parent Plus loan is the income contingent repayment plan. The income contingent repayment plan is the least favorable out of all of the 4 income-driven repayment plans, which I can go through them really quickly. You have the payee, which is the pay as you earn. You have the repayee, which is the revised pay as you earn. Then you have the IBR, which is the income-based repayment plan. And then it's the ICR, the income contingent repayment plan, which is the least favorable, but that is the only one that is allowable for Parent Plus loans. So when you're looking at the ICR, let's talk about this for a minute, because you're going to want to think about this when you are trying to make a decision as to what you should do to be more, I guess, to be in a situation where you could have a more affordable loan plan, but also not put yourself in a situation where you would go into default. So the first thing is, when it comes to IDRs, and this is IDRs across the board, income-driven repayment plans, which is any one of the 4 that I mentioned, any one of those, if you have been on a payment plan under an income-driven repayment plan for at least 25 years, whatever your remaining balance is will get forgiven. So that is called IDR forgiveness. Now, I know a lot of you are not going to want to be on an income-driven repayment plan for 25 years because that's almost like you being trapped into a 30-year mortgage at that point. However, there are some people that are on IDRs that essentially work to their benefit because they may be under a different loan program, which would qualify them for an IDR that has a better advantage, like 0 payments that will be due because of their income and so forth. Then they would go that route of just saying, okay, I'm just going to stay on my IDR. I'm going to stay on my income-driven repayment plan. I'm going to stay on my income-based repayment plan. And then once I hit 25 years, based on my income, my required payment is going to be 0 anyway, whatever the case may be. And after 25 years, it's forgiven. But some people may not be viable for everyone. And when I'm thinking about those who are on the Parent Plus loans that are considering wanting to get on an IDR, which would be the ICR plan, the income contingent repayment plan, you have to think about what the criteria is for that. So when you are on an ICR, they base your payments on the lesser of one of 2 things. One is 20% of your discretionary income. So your payments will be based on 20% of your discretionary income, or it would be based on what you would pay if you were on a fixed repayment plan over 12 years. So when you're looking at ICRs and you can do your estimates, you can figure it out. And some people may be asking, okay, well, what is discretionary income? Discretionary income is the formula, as you know, as some of you may know, if you think about it just from a personal finance perspective, it's your after-tax income, essentially less any of your mandatory expenses that you have to pay. So from a personal finance standpoint, it will be that. However, when the Department of Education is referring to discretionary income, they are not basing it off of what your taxes are or based on what your living expenses are. They're basing it on the poverty guidelines for the state in which you live in. And they base it off the poverty guidelines that come from HHS, which is Department of Health and Human Services. So the Department of Health and Human Services, they issue poverty guidelines and it's updated every year. So I believe the most recent one that I saw that's available is 2022. I'm pretty sure they're going to be updating it for 2023 at some point, but we're still in the tax year, or we're still in the calendar year of 2022. So the guidelines that are available is for, I can't think of it off the top of my head, but it's literally based on your number of people that's in your household. So if you are a person who is a parent, I don't know if you're married, I don't know if you still have other children that you claim as dependents, but it'll be based on your household size. So if it's just one, if it's two, if it's three, or if it's four, however many people, and then whatever amount that's beside that particular count for your household size. And to be honest with you guys, the poverty guideline threshold is very low. And I'm talking about anywhere between, depending on how many people that you have in your household, it could be anywhere as low as 10 or something thousand up to maybe 40 something $1,000. And that's if you have like 8 or more people. So if you are someone who falls under the threshold of having one person or 2 people in your household, you're looking at essentially no more than, I want to say $18,000 or something along those lines. So if you take your annual income, and based on what they said the calculations are, they base their annual income based on your AGI, which is your adjusted gross income. If you take that amount from your tax returns, I believe your most recent tax returns, if you take that from your most recent tax returns and you subtract that poverty line level, which if you have 2 people in your household, $18,000, then that will give you your difference. Then you take 20% of that. And then when you take 20% of that, that will give you what your monthly, or really your annual payments will be. And you would divide that by 12 to figure out what the monthly will be. So it could work to your advantage if you consider doing an ICR considering the amount that you make. So, but again, it gets adjusted. So you have to kind of recertify, you have to basically update your income every year when it comes to that. So it could adjust over time. So praying that was a helpful response to you. I know I kind of went off, but I wanted to explain it to make myself as clear as I could. Until when is it available? So until when is the one-time debt relief application available? So the one-time debt relief application will be available once it officially goes live. So right now it's in beta launch. So as long as you go to the site and if you're able to access it, you can submit your application. Let me go in and see. Let me refresh the page one time. I'm refreshing the page and it's still available right now. So if you want to go ahead and try, studentaid.gov/debt-relief/application. It'll take you to the short form that you would have to fill out to submit your application for the one-time debt relief. But you have until December 31st, 2023 to submit an application for the one-time debt relief to receive either the $10,000 or the $20,000 of student loan debt relief, depending on which one you qualify for based on your income. And one of the things that they said inside of the application portal is because you don't have to provide any supporting documentation at the time that you apply, you're literally just affirming based on which statements will be true for you. If they come back or if there is something that they need to verify, then you will be responsible for providing that proof of income to them to ensure that they're able to properly, successfully process your application. And they did mention is that if they request information from you and you do not respond by March 31st, 2024, then you essentially forfeit your application. Yes, this conversation is just for federal student loans. If you're on an income-driven loan, can you apply for the debt relief? Yes, you can apply for the debt relief regardless of the repayment plan that you are on, regardless of the payment status, whether if you're in school or not in school. This is why dependent borrowers can also apply for the one-time debt relief at this time. It's just based on your income let me be specific. It's based on your adjusted gross income for tax year 2020 or tax year 2021 purposes. And if you are and it's based on whether or not your loans were dispersed on or before June 30th, 2022. So if you have any federal loans that were dispersed on or before June 30th, 2022, and you meet the income criteria for adjusted gross income purposes for either 2020 or 2021, you can qualify for the one-time debt relief. And if you are a student, a dependent student, meaning your parents are carrying you as a dependent, so you're not filing a tax return, you can still apply for the one-time debt relief as long as you have loans in your own name, and you would be certifying based on your parents' AGI. So you would need to know your parents' adjusted gross income to make sure that they meet the criteria depending on their tax filing status. The application was so easy. Literally took me a second to do it. Amen. Come on and preach and give these people in this room some encouragement. Praying it's going to be okay. So I would say disregard the people who are being negative in the comments right now. So at the end of the day, if you feel like it's something that you don't want to hear about, you could exit the room. Thank you. You can exit the room. But at the end of the day, I am grateful for those who are able to receive whatever they are able to be able to receive. All right.
The Debt Demolisher TV with Sophia Melone. The Debt Demolisher TV with Sophia